This video reviews Toyota's financial results for the first quarter of fiscal year 2026, covering the period from April to June 2025. Toyota Motor Corporation is a Japanese multinational automotive manufacturer. It owns the luxury brand Lexus and has partnerships with other automakers such as Hino, Daihatsu, and Subaru. First quarter results summary. For the first quarter, operating income was 1.2 trillion yen, representing a decrease of 0.1 trillion compared to the same period of the previous year. A major factor behind this decline was the impact of U.S. tariffs, which amounted to 450 billion yen. In response, Toyota has revised its full-year operating income forecast downward by 0.6 trillion yen, now projecting 3.2 trillion yen in operating income. This revision reflects the full-year impact of the U.S. tariffs under the Japan-U.S. agreement, which is expected to total 1.4 trillion yen, an increase of 1.2 trillion yen from what had been assumed in the previous forecast. The progress rate is 31.6%, against the revised annual net profit forecast of 2,660 billion yen, which represents a 44% decrease from the previous fiscal year's profit. Toyota's forecast is usually conservative, but how much it can improve amid the impact of U.S. tariffs remains uncertain. Consolidated vehicle sales. Consolidated vehicle sales for the first quarter reached 2,411,000 units, which is 107.1% compared to the same period of the previous year. Sales of Toyota and Lexus vehicles totaled 2,643,000 units, or 106.1% year over year. This increase in sales was supported by a global recovery in production, made possible through efforts to strengthen the company's operational foundation. The number of vehicles sold continues to increase even now. Financial summary. Financial results for the first quarter showed sales revenue of 12,253 billion yen, reflecting solid performance across major regions. However, operating income and income before income taxes declined. Net profit decreased by 36.9% year-on-year to 841.3 billion yen. Analysis of operating income. Operating income was negatively affected by exchange rate fluctuations and U.S. tariffs. While cost reductions had a positive impact, they were outweighed by increased supplier-related costs and material price changes. Stronger marketing efforts, including higher vehicle sales and value chain profits, supported earnings. However, excluding exchange rate and swap effects, operating income still declined compared to the previous year. Geographic operating income. Operating income in Japan fell due to exchange rate impacts and higher expenses, while North America saw a decline from U.S. tariffs. Other regions recorded increases, supported by price revisions and other positive factors. FY2026 forecast. The new full-year consolidated financial forecast is based on assumed exchange rates of 145 per US dollar and 160 per euro. Under these assumptions, Toyota expects sales revenues to reach 48,500 billion yen, not changed from previous forecast. However, operating income was revised downward, and net income was lowered to 2,660 billion yen from 3,100 billion yen. Although there is now more clarity regarding U.S. tariffs, a significant profit decline from last year is still expected. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 2,680 yen as of August 7th, and the U.S. dollar stock price is $183.99 as of August 6th. This financial results were announced during trading hours, but the stock only declined by 1.5% from the previous day, showing no significant price movement. Current PBR is 0.97 and PER is 13.1. Dividend yield is 3.54%. Compared to recent years, the stock appears relatively expensive in terms of PER. However, based on PBR and dividend yield, it seems undervalued. Like many other Japanese companies, Toyota has been steadily increasing its dividend every year, so the dividend yield remains relatively high, which is a positive point. Conclusion. In the first quarter, profit declined, significantly impacted by U.S. tariffs and unfavorable exchange rates. Toyota revised its full-year earnings outlook downward to reflect the heavier-than-expected burden from tariffs. While Toyota's forecasts are typically conservative, the recovery in profitability will depend on how effectively it can navigate these external pressures going forward.